Hello students, today I am about to start with session 42 from the chapter Income from Capital Gains. So in session 41 I have discussed you a simple problem and on to how you are supposed to calculate with the taxable income from capital gains. So this is actually a similar kind of a problem, similar type of problem working out, and the study material numbering 42 has given you a few illustrations. I have taken one illustration from the study material. If you have then the same problem is also there available on the PPT which I am working out, and you can just refer the study material as well as the PPT, and after watching the video you get a clarity about this particular problem. So the problem is about of Mr. Vinod, who is actually purchased a residential house, and it is purchased in the year in Mysore on 1/4/1979 for 25,000, and he has added one floor in the year 1980 at a cost of rupees 7,000. So here what actually we are supposed to keep in the mind is that follow the same procedure as we have followed in the previous problem. What you are supposed to see here, what all the informations, first see whether sales consideration is given, what is the sales consideration, see whether the expenses are incurred in the process of transfer of the asset, and what is actually the what index cost of acquisition, and then in the calculation of index cost of improvement, and see whether there are any deductions available under section 54. So this is actually the process which you are supposed to follow as I followed in the session 41. So what I am supposed to do now, computation of taxable income from capital gains of Mr. Vinod, okay, mention. So here what do? I put one particulars column, and two amount columns are mentioned here. Two amount columns are mentioned here. I shall start with the problem. So what is the sales consideration? In this particular problem it is 15 lakhs. So sales consideration is 15 lakhs. What is the sales consideration? It is 15 lakhs. And coming to the next one, is there any expenses incurred in the process of sale of the assets? No, in this problem there are no transfer expenses. There are no expenses with respect to the transfer of the assets, thereby it is nil. So what is your net sales consideration? Net sales consideration, your net sales consideration is 15 lakhs. So from this what you are supposed to deduct? You are supposed to deduct the indexed cost of acquisition. Index cost of acquisition. How do you calculate that? What you are supposed to do? First of all, you are supposed to take what is the cost of acquisition or the fair market value, whichever is least, cost of inflation index during the previous year, and the cost of inflation index in the year when the asset was acquired. So what is the cost of acquisition given in the problem? So it is 25,000. Fair market value is also given. It is 75,000. Cost of inflation index during the previous year 301, and as it is purchased in the year 79, then from before that also or till 2000 it is 100. I am mentioning 100 there, and after that I am getting an amount of 2,32,500 which I will be deducting. 2,32,500 I am deducting from 15 lakhs. I am arriving at 12,67,500. Then again from that I am supposed to deduct the indexed cost of improvement. If there is any improvement, incurred on the property? Yes, even in this particular problem there is cost of improvement incurred, and cost of improvement is 20,000. Here it is mentioned that during June 2013 a cost of rupees 20,000 is incurred on improving the house. So during that year the cost of inflation index is 220. We are supposed to take that 20,000 into 301 divided by 220, and it is coming up to 28,182. So after deducting that you are arriving at 12 lakh 39,318. So this is your taxable capital gain. Why I am concluding the problem here is that there is no deduction available under section 54. Even in this particular problem, I am winding up the problem as taxable income under the head, what do you say, capital what gains. So here again just revision given in the after taking the information given in the problem, what I have done, taken sales consideration as it is given 15 lakhs. As there are no expenses incurred in the process of transfer of the assets, there is nothing to deduct. Then again I proceed with the calculation of index cost of acquisition. Index cost of acquisition is nothing but cost of acquisition or fair market value, whichever is higher. 75,000 is higher. 75,000 into 301 divided by 100. So I take this and I calculate. Then here I am supposed to do the cost of improvement. 20,000 is incurred during the year 2013. During the year 2013, the cost inflation index is 220. So current previous years cost of inflation index is 301. After deducting that, the taxable capital gain is 12 lakhs 39,318. With this I conclude the session 42. Hope you found this a little helpful. Thank you, children.